Economic competitiveness has become a crucial issue in Canada, with, of course, the administration of U.S. President Donald Trump upending decades of liberalized trade policies in a bid to pressure companies to relocate to the United States. Our next guest is a key leader in Canadian capital markets and says Canada's next federal government needs to take several steps to boost competitiveness on this side of the border. We're joined now by John McKenzie. He's CEO of TMX Group, which, of course, is the operator, among other things, of the Toronto Stock Exchange. John, thanks for coming in.
Paul, thank you for having me.
You and your colleagues and your peers in capital markets are always concerned about economic competitiveness. Is it a more crucial issue now than it's been in the past in Canada because of things I just talked about?
I think because of that, and also the history we've had over the last number of years. So even before this U.S. election and the new administration, we already saw declining Canadian competitiveness, productivity, all those measures that we have historically maybe have taken a bit for granted. And then with the change of tone from the United States, I was getting concerned that we were really getting caught up in a debate about tariffs mostly, and that was taking all the oxygen out of the discussion, which is around really what are we going to do for long-term competitiveness? Because you've got it exactly right in your comment. The U.S. is going to work to make their marketplace more competitive, attract more industries and more jobs. So we need to make sure the Canadian market is even more competitive to ensure we've got that home market advantage and that we're not just looking for ties, but we're working to even be stronger than the U.S.
And what should people understand about competitiveness? It's not just about stock markets going up. It's about, as you've referenced, the ability of companies to grow and expand and therefore hire more workers, pay those workers higher wages over a period of time, pay tax revenues to the government, which finance important social and other government priorities, correct?
Oh, those are exactly the right ideas. You know, a lot of people, when they think about the stock market, they think about trading activity. But it really is about helping companies list and raise money to expand their businesses. And we are actually blessed in the Canadian marketplace. Our unique model of venture and the senior market, unique in the world, we actually list more companies than most countries around the world. So we've got a great ecosystem to build from, but we got to make sure we're nurturing that. And that means we got to break down the barriers of what it takes for companies to raise money. Okay,
so you and your colleagues at TMX have several recommendations that you want the next government of Canada, whichever it may be, to follow. One of the first recommendations is allow companies to deduct the full capital costs of their investments. Explain.
Yeah, and I'm going to qualify, not just the next federal government. We've been asking these for previous federal governments too. If you want to reduce the friction of a company to invest in Canada, if they can deduct those capital investments immediately from day one, we will make this one of the most competitive jurisdictions to build factories, to build data centers, to open new mines, and to build infrastructure. So we're, again, reducing that cost of investing in Canada, getting that capital off the balance sheet and into productive assets.
How much of a change would that be from the status quo?
This would be a polar change.
Right.
And so that's why we're looking for things that aren't just tinkering around the edges, aren't just simple short-term windows, but permanent changes that make us more competitive than the U.S. market. And this would leapfrog the U.S.
Do you have any idea of what the hit would be to public finances from the loss of that tax stream?
Not at this point, because when you do that, you also need to do the work to say, what's the economic impact that these changes create? And often we get just caught up in the cost side and not on the piece in terms of what we're going to do in stimulating new investment. Because that new investment, as you said earlier, creates jobs and a larger tax base.
Okay, number two is lower capital gains taxes, which has been a hot button topic for a while now. Lower capital gains taxes on Canadian investments in Canadian companies.
And this is one I've been calling on for years, because if you really want to de-risk investing, a lot of our companies are small or mid-cap companies. It takes risk investment to expand them. So we want to make it so that that risk is actually subsided any way that we can, and really incent that investment into Canadian companies, not global companies. So we've actually said there's a way to make this cost neutral, which is we create the incentive for Canadian-based companies and do higher capital gains taxes on foreign companies, very much like we do with dividends, like we do with other things in our ecosystem. And so that we can incent that. And we're glad to see that some of the political parties are actually starting to take these up.
Right.
We've been calling them for years, and they're actually now in the national discussion now.
You see, I'm guessing you're referencing a Conservative Party of Canada position on capital gains taxes and Canadian investments therein. Is that?
Absolutely. And all I'd say on that one is we would like to see that to be a permanent plan and not a short-term plan. And we'd love to see the existing government pick that up as well.
Okay. Mining has always been, from the beginning of this country, a huge industry. You want the mineral exploration tax credit made permanent.
Exactly. Now, mining, actually, we are the leading mining market in the world. We list more mining companies than any other country around the world. We do more mining financing than any other country in the world. But we are the slowest country to actually permit and get new mines to production, anywhere from 13 to 15 years. So we've got these great programs like the Mineral Exploration Tax Credit, but they're short term. And if it's going to take you 10 years to build a mine, a 2-year tax credit doesn't get there. So again, this is that area of make these things permanent so you give confidence to investors to invest long term.
Flow-through shares have been around for many years in one form or another, and changes have been made to the flow-through share rules over the years as well. One of your recommendations is expand flow-through shares to other growth sectors.
And this is an area where you've got early-stage companies that often do losses earlier on. If you can flow your losses through the investors, that makes it cheaper for the investors to support those companies. This is another great Canadian invention, really big for building out the energy sector. But a lot of other new sectors, again, like critical mineral mining, technology, would have those same features that could benefit from this. So again, it's another way to unlock different areas of investment in the country.
Okay, the second to last one is a big one, and both the Liberals and the Conservatives seem to have proposals in their platforms on this, and this is to create an investment-friendly environment for major projects. So as we all know, I think the Conservatives and the Liberals are promising to get big projects approved more quickly in this country. Is that what this recommendation is addressing?
It's exactly that. When you think about what are the conditions for really investing in a country, it's about cost and risk, but it's around certainty as well. If you can't get certainty that you can get a project done, you can't get folks to invest behind it. So that's what we're driving on here. What I'd like to hear more clearly, though, is those policies that have gotten in the way of investing, like the Impact Assessment Act, the one that's known as C-69.
Right.
As long as that exists in its form, companies are going to sit on the sidelines because there's no confidence they can execute in that. We've had one party, exactly, the Conservatives said they'll get rid of it. I'm waiting to hear the same thing from the Liberals.
Is that what companies tell you?
Yes. And if you look at the history, if you look at the energy sector specifically, if we went back 10 years ago, we would have had 400 companies listed on our two marketplaces in energy. It's less than 200 today, and the financing we're doing in energy has dropped almost 90% a year. And they will put that right at the front, as we have no certainty on getting execution of a new project done. So that has to change, and I'm hoping that everyone will take that up.
Okay, let's squeeze in the last one. Provide equal access to innovation support. What does that mean?
This is a simple piece, and this isn't actually all governments. You know, all governments will sometimes come out with programs, but they will only benefit private companies. And the R&D tax credit regime in Canada is one of them. We worked heavily with the last government to actually get this changed. It was on the order paper in the fall when the government was suspended. And this is really to make sure that whether you're a small company, public or private, you get equal incentives. And so a small company that decides to go public doesn't lose their credits for research and innovation. That's the last thing we want in Canada, is actually penalize companies for raising money, particularly around research and innovation. So this is really about making policies equal to all and democratizing investment in the country.
John, thanks for coming in today. We appreciate it.
Absolute pleasure. Thank you.
John McKenzie is CEO of TMX Group. It, of course, is the operator of the Toronto Stock Exchange, among many other activities it does.